Hello, ladies and gentlemen, and welcome to the Construction Project Cash Flow Forecasting course. Let me first introduce myself. I'm Mohammed Al Abbasi, a professor of construction engineering and management, as well as infrastructure asset management, and I'm really delighted to be offering you this course in which, in a nutshell, I'm going to teach you how to forecast the cash flow for your construction project as a general contractor. So I'm talking from the contractor's perspective here. So probably most, if not all of you, have seen this curve before, in which you have applied the main concept of the earned value management. This is what we refer to as the cost baseline of our project. And by the way, even if you don't know what this curve is all about, this is actually what I'm discussing throughout this course. So if you have applied project management before and you have applied the earned value management and you have done your scheduling before, I'm sure, again, most if not all of you are aware of what I'm talking about here. However, I'm not going to teach you how to plot this curve using Excel or Primavera or Microsoft Project. Well, I'm sure you already know how to do that. Actually, I'm taking you a step backward to know behind the scenes, which is very important. I see actually it's very important to understand what are the numbers behind the scenes. How do we identify the different amount of cash that is incurred at every time interval? How do we come up with these numbers? What is the rationale behind these numbers? So basically, this is what I'm discussing here in this course with a full detailed examples, different examples, taking into consideration different aspects like having a down payment from the owner and considering the financing charges and considering the timing of the income, the expenses, and subcontractors, many practical consideration we're gonna see actually in order to understand and to define how do we accurately forecast the cash flow of our construction project. So we have been talking about the cost baseline here. There is another stepped curve as we can see here. Maybe this is something actually that you cannot do using Primavera or using the Microsoft project. This is your income profile. And it's really important to incorporate it with your S curve or with your cash out curve or your cost baseline curve in order to have other uses for such a cash flow profile. And this is what we're going to discuss throughout this course. So basically, there are many reasons that have been articulated. Why do contractors fail in different construction projects? There are many different reasons, for example, like having an inadequate planning of the project or unrealistic assumptions regarding the risk items of the project, for example, or maybe growing too fast by taking different projects at the same time that is beyond the capability of your construction company, and also bad cash flow management. This is considered one of the main reasons of why do contractors fail, because of their poor prediction or forecasting regarding the movement of the money in and out of your project. So we can say, in other words, that the capability to timely obtain sufficient cash can be considered one of the most critical challenges that contractors usually face during the execution of their construction project. And accordingly, we can say that cash or money is considered as the most important type of resources which should be well managed and planned for. So when we talk about construction projects, we have different types of resources in which we usually refer to them as the four M's. M for machinery, M for manpower, for materials, and for money. That's the fourth type of resource. In addition, for sure, for the time, this is considered as an important resource for our project, and the space, the site space of our project. But without money, without cash, we cannot acquire any of these resources. So for sure, all of our different types of resources are important, but cash or money, this is the foundation for your project. So when I'm talking about cash or money or having insufficient cash, I'm not saying that you cannot fund the project from scratch. For sure, you will be planning for that. But I'm talking about the timing of having such a cash. This is what we're talking about here. And this is one of the reasons why it's very, very important to have a good knowledge about the contractor's cash flow for his or her project under construction. So when we talk about the cash flow forecasting, and since this is part of the project management or construction project management, probably all of us know that we have different knowledge areas in project management. We have the integration management knowledge area, the cost management, the scheduling management, resource quality, risk, and so on. So which knowledge area are we talking about here in this course? Well, we're talking about many different knowledge areas because if you have background of project management, and by the way, I'm not saying that you should understand fully the different 10 knowledge areas and the 49 processes, just basic understanding of these processes will be helpful for you, by the way, to take this course. But still, I'm going to start with you from scratch when we talk about cash flow. So let us go back to the point that I was just talking about, the different knowledge areas. That if you are aware of the different knowledge areas according to the PIM book or the Project Management Body of Knowledge Guide, you know that all of these different knowledge areas are interconnected and interrelated with a very high correlation between them. We don't say that, well, we start with the integration management knowledge area, and then after that, we start with the cost management knowledge area, and then we start with the scheduling management knowledge area. No, this is not the way it goes. Well, for example, when we talk about the resource management knowledge area and the cost management knowledge area, these are two knowledge areas that have a high degree of correlation between them. You cannot cost estimate your project without identifying your resources. So as we can see here that there are like interconnection between these two different knowledge areas. So the same thing applies here when we talk about the project cash flow forecasting. We're talking about different knowledge areas like the cost management knowledge area, the resource, the schedule management knowledge area, and also we're talking about the project financial management knowledge area. Well, some of you may ask me, well, this is not one of the 10 management knowledge areas. And I'm telling you, yes, it's not one of them according to the PIMBOK 6th edition, according to the main defined 10 knowledge management areas. But talking about construction projects, actually there is an extension book or there is an extension PIM book for the construction projects in which it defines two additional knowledge areas. One of them is the safety management knowledge area, and the second one is the financial management knowledge area. So this is what we are partially discussing here, the 12th, or we can call it the 11th knowledge area, whatever. It doesn't have a certain order, but this is what we're talking about in this course. So when we talk about project financial management, what are we talking about? What it is mainly concerned with? Well, it is mainly concerned with identifying the source of funding. That's the main concern, one of the main concerns of financial management knowledge area. You need to identify from where are you going to fund this project, whether as an owner or as a contractor. But since I'm speaking here only about contractors, so the same thing applies. Are you going to use your internal sources? Are you going to use external sources? Or are you going to use mix of them? So when we talk about internal sources, we're talking about the capital of the contracting firm itself. We're talking about the stocks, for example, that the contracting company have. Are they going to sell stocks, for example, or sell bonds, or external? Maybe we're going to seek for a loan from a bank. Well, we need to identify this when we talk about a project that we're going to bid for as a contractor. Or another classification, which is almost similar, we're talking about either the sources of capital can be a debt or an equity. So again, it doesn't have to be either this or that. It can be a mix between both of them. And there is a ratio, actually, is there is an optimum ratio to identify for each individual project the balance between how much am I going to use based on my internal resources, as I'm talking about capital here, or how much am I going to use, I'm sorry, not or, and how much I'm going to use or utilize as an external source of money. But this is not what we're going to discuss in this course. But I'm just giving you a glimpse about what financial management is about. Also, it's about forecasting the project cash flow. And this is the main concern. This is the main scope of this course. One of the main functions of project financial management knowledge area is to forecast the project cash flow and to monitor and control the cash flow, which is highly interrelated with the risk management knowledge area, if you are already aware of, in which you apply the earned value management. You identify the S curve, you have something called the planned S curve or the planned cost baseline, and then you have the actual one. So simply you're comparing both of them together to identify something called the actual cost work performed, the budget cost work schedule, the budget cost work performed. I'm pretty sure you're aware of that. But again, if you're not, don't worry. We are not discussing this here in this course, and it's not a prerequisite for such a course. But I'm just, again, giving you a glimpse about it. In order to identify why do we are calculating the or determining the budget cost work schedule and the budget cost work performed, and also determining something called the schedule performance index, the cost performance index, simply to identify, are you within the schedule or ahead of schedule or behind schedule? And the same thing with respect to cost. Are you within budget? Or there is any certain cost overrun or cost underrun? So we need to monitor the project status of our project, the progress of our project, I'm sorry. So this is what financial management is mainly concerned with, but what we are focusing on in this course is to forecast the project cash flow. So what is cash flow? We're saying cash flow, cash flow, cash flow. What is it? Simply, it is the movement of the money in and out of the project. In any project, there will be cash in and cash out. Or we can say income and expenses, or revenues and costs, all give the same meaning. And by the way, when I'm saying revenues, I'm not saying revenues generated out of this project during operation. This will not be a project actually. If we are saying the revenues generated out of based on the operation of this project, say that we have constructed a factory, for example, to produce the cover of smartphones, for example. So the revenue generated after this industry or factory is built, this is not the revenues we're talking about here, because this will not be a project, this will be operation. Probably you know the difference. But when we say cash in or income or revenues, we're talking about the different work items that are required to construct such a project, and such work items, there is a person who is responsible to pay for them, which is simply the owner. However, what actually happens is that the contractor usually pays out such amount of money for such work items, and then later on he or she receives the cash in from the owner based on the work or the portion of the work items that have been executed at a certain time interval. We go into a lot of details with respect to that, but I just had to differentiate between what do I mean when I say the revenues or the income here. I'm not talking about something that is generated out of the operation of this project. We're talking about during the construction stage. When we talk about cash flow also, there are two main types of cash flow, the company or the corporate cash flow and the project cash flow. So when we talk about the company cash flow, I'm talking about the construction company, the construction firm here. They are working on several projects simultaneously, and also they have their own expenses for their headquarters office and for their different branches. So we're talking about on a bigger scale here. We're talking about something that is to be done annually. The income statement, the balance sheet, defining the assets, the liabilities. We're talking about accounting here, but this is not our concern in this course. In fact, what we're talking about here is the cash flow on the project level. For each individual project, I have to develop a cash flow, the cash in and the cash out. And the same thing applies, by the way, when we talk about the company or the corporate cash flow, but this is something to be done in a different way. Sort of different way. There are some sort of similarities, but still there are more details here. But what we are discussing in this course is on the project level, the project cash flow. So what is project cash flow analysis? Simply, this is the process of forecasting or predicting or projecting the expected expenses and income based on defined time intervals throughout the construction stage. For every project, we have a certain start time and a certain finish time. So within this start and this finish time, with the start of the project and the finish of the project, there are certain time intervals based on defined based on the contract. And what I need to do is to know what will be the expected or the forecasted expenses at each time interval, and at the same time, what will be the income at each time interval. This is simply what is project cash flow analysis or project cash flow forecasting. But the main question here is not how do we develop this cash flow profile and how to estimate the numbers. Well, this is important, and we're going to see in details how we do that. But we need also to understand why do we do that? Why it is important to forecast the cash flow of our project, specifically when we talk from the contractor's perspective. The first thing that it ensures that sufficient cash is available to meet the project demands by showing the maximum required credit and its timing. So as we can understand now that for every project there is cash in, cash out at every time interval. So usually the expenses or the cash out is more than the cash in at at the beginning of the project or throughout the project. And at a certain time, maybe the cash in will be more than the cash out. I'm talking about the cumulative cash in and the cash out. Because in a simple manner, the contractor pays first and then the owner pays the contractor. We will see the details of this. Of this dilemma when we apply different examples and we understand different contract provisions that affects the projection of our cash flow. But let us go back to the main point here that there are expenses, there are income. And as we said, usually the expenses up to a certain point of time is more than the income. So if it's more than the income, this means that as a contractor, there will reach a time in which these accumulated expenses will reach to a maximum. So this is the maximum required credit. This is what I'm looking for. This is why I'm constructing the cash flow in order to identify the maximum required credit. What is my maximum negative? In order to be able to what? To simply secure funding. As simple as that. I need to know not only how much, well, for sure I know how much the cost of the project will be, and I know how much will be my overheads, my profit, and so on, but this is not my main concern. I need to know the timing of these expenses. How much am I going to spend every time interval? And what will be my maximum negative? Because I can't say that, well, the cost of the project is $1 million, then simply I should secure $1 million. No, it doesn't work that way. Because at the same time there are income from the owner, right? This means that it will be less than $1 million for sure. So I need to identify how much this amount, the maximum required credit, and its timing also. When will it happen? In order to make an advance arrangement to secure funding. Simply, we are talking about finance acquisition. Let's say that the maximum required credit is $200,000, so I want to make sure that this will be available at this time. Also, it provides a reliable indicator to lending institutions that loans can be repaid according to an agreed program. Consider it the same way as on the personal level. If you are going to take a loan from the bank, well, to just do a certain small investment or whether for your studies, well, sometimes the bank for sure will need sort of guarantees. Well, how are you going to pay back such loan? So there should be a sort of security, there should be sort of guarantee, there should be sort of study that has been done in order to assure the bank and to convince the bank or the whatever the financial institution or the lending institution is that this loan will be repaid and can be repaid according to an agreed program. Also, it is important to cash flow, to forecast our cash flow because it can be used as an indicator of the project progress when applying cost and time control. I have mentioned that before, which when we apply the earned value management. The earned value management, simply we need to know, are we ahead or behind of schedule? How do we do that? We have to refer to our cost baseline, the S-curve that we have seen at the beginning of the introduction of this lecture. So basically, it's not only time, it's also cost. There is a cost overrun or there is a cost underrun. So again, this cash flow will help me to identify these project progress parameters or performance indicators. Also, it allows the contractor to assign a suitable final markup for the project. So usually, if you know what is markup, simply this is a percentage that is added to the base estimate or to the total cost of the project in order to cover for the additional fees for the contractor. We're going to discuss it in more details later. However, usually when you assign a markup for the project before while doing your cost estimate and calculating the bid price for your project, this markup is subject to change because there is something called the financing charges. We're going to talk about it in a lot of details in this course. But this markup actually will change after you develop your cash flow. Because when you initially develop your cash flow, you don't know what the financing charges will be. This is something that is yet to be calculated after you develop your cash flow or you construct your cash flow. And based on these financing charges, there are certain sort of adjustments that you have to do in order to include such financing charges in your cost estimate, and accordingly, you come up with a final markup for your project. And we will have a full example regarding how to assign a suitable final markup for your project. So this is, ladies and gentlemen, simply what this course will be about. We will have a lot of different examples, detailed examples, but before going into these detailed examples, it's not only about having certain numbers and adding them, subtracting, just constructing the profile or the curve, that's it. No, we need to understand the logic behind it. So we need actually to have sort of a basic background, and actually I'm putting it here in this course, although as I have mentioned in the course description, well, you should at least have basic background of project management to know what we are talking about. But as much as possible, I done my best actually to include every important aspect that we're going to need in order to understand how do we construct this cash flow. What I want to say is that if you're not aware of the different knowledge areas of the project management or have very basics of project management knowledge area, don't worry. I'm trying to include everything in this course, and you can simply enroll in the course and see. If you feel lost or something, it's easy to withdraw from this course. If you feel that everything is clear for you, then for sure I'll be glad. Well, that's it for this introductory lecture. And starting from the next lecture, and the upcoming lectures, we're gonna understand basics, important basics in order to know how to develop our cash flow.